Hello everyone. In this presentation, we are going to discuss the question papers of Money and Banking. The exam was on 31st December, and if you all remember, I shared the sample questions for the preparation of this paper on 13th December. So now it's time to discuss the question paper and let's find out how many questions were there in the sample questions which help you in your exam. Starting with question number 1A. What are the new monetary aggregates suggested by the third working group of RBI? Explain the rationale for this revision of aggregates. So if you remember the question number 18 and 19 of topic 1, I asked you to prepare the new measurement of money supply and differentiate between monetary and liquidity aggregates. Reasons for the new measurement of money supply. So here both the two questions are there. It is talking on the monetary aggregates and the rationale for this revision, that is reasons for the new measurement. Now coming to question number B. Derive deposit multiplier and complete money multiplier and numerical on it. So in question number 10, 11, 12 of topic 1, I asked you to please prepare nicely the deposit multiplier, the currency multiplier and money multiplier, and also prepare numerical question on this topic. Now coming to question number 2A, the principal agent problem in equity contract and explain why. Debt contract, this is not DAT, this is basically a debt contract, are more prevalent in the financial market than equity contract. Does this solve the moral hazard problem? So if you remember, question number 7 and question number 6 of topic 2, I asked you to prepare what do you understand by principal agent problem? So this question was there, how to solve it and how moral hazard affects the choice between debt contract and equity contract. So these two questions were in 2A. Now coming to 2B, discuss the causes and consequence of financial crisis. So in question number 9 and question 10 of sample questions of topic 2, I asked you to prepare what do you understand by financial crisis, explain with an example, and discuss the factors causing the financial crisis. Now coming to question number 3A, better credit risk does not subsidize poor credit risk when symmetric information exists, whereas the honest borrower subsidizes dishonest borrower when information is asymmetric. So for this question, I asked you to prepare what do you understand by adverse selection and how to solve this problem in topic 2. So this is the question from adverse selection. Now coming to part B, illustrate how long call position offers unlimited gain against rising price of underlying asset but a fixed loss if underlying asset price declines. So this is the question from long call, that if you are taking a long call, then the rise in the price of the underlying, if the stock price rises, your long call will have unlimited profit. But if the stock price at the time of expiry goes down, your long call will expire worthless and giving you the limited loss, and that loss is the option premium what you have paid to come into the trade. So if you remember, in the sample question, I asked you to prepare explain how short call is the mirror image of long call. So now coming to question number 4A, which is talking on preferred habitat hypothesis, expectation, and segmented market hypothesis, and a numerical question on it. So if you remember, I gave you the question number 2 of topic 3, The expectations hypothesis and segmented market hypothesis are actually the extreme version of preferred habitat hypothesis explained. And the question which came in exam was explain how preferred habitat hypothesis is the combination of expectations and segmented market hypothesis, and it was a 9-marker question. If you see my video, the sample question video, I asked you repeatedly to prepare this all 3 hypotheses because this is a very important part of the syllabus and it came as a 9-marker. Along with that, I also asked you to prepare a numerical question on it. So the numerical questions also came from this part. Now coming to question number 5. Question number 5 is on trace out the major differences in the degree and the nature of NPA, that is non-performing asset crisis in Indian banking system during 97-2002 and after 2008 global financial crisis. What have been the policy response to this crisis in 2 different time periods? So for this question, my question number 1 and question number 2 of topic 4, I asked you to prepare focus the light on non-performing asset in Indian banks and the lessons in the policy recommendation to correct it, that is policy response to this crisis, and explain how banks and the bankers have been the heart of the crisis of 2008. So this was the question which was expected and it came a 15-marker question. Now coming to question number 6a. How have the capital adequacy norms changed in recent years and how is Basel III an improvement over Basel II norm? So this was an 8-marker question, and if you remember in my sample question number 8 of topic 4, I asked you to prepare how is Basel III an improvement over Basel II. So this came in the exam. Now coming to part B, several variables can be placed in one or more of the following categories: policy instruments, operating targets, intermediate targets, or final targets. Which of the following variable can be placed in which of these categories and why? So you have been given 3 variables: non-borrowed reserve, interest rate, and money stock. So for this question, I gave you question number 7 of topic 5, where I asked you to prepare explain the difference between interest rate and money as an intermediate target and which one would you prefer. So this is the interest rate and money stock as an intermediate target. Now coming to question number 7. What do you understand by unconventional monetary policy measures? Under what circumstances are these used? Outline the categories in which these unconditional measures can be classified, explaining any 2 of them. So for this question, I gave question number 15 from topic 5 and I asked you to prepare the difference between conventional and unconventional monetary policy measure. So this time you got a question from this unconventional policy measures and it was an 8-marker question. Now coming to question number 7b, explain the process to make the money multiplier invariant to the change in the statutory cash reserve requirement. So for this, I have asked you to discuss the money multiplier approach and its critic from topic 1, and I have also made a video and explained this statement in that video on money multiplier. Now coming to the last question, question number 8. The first question is from the movement from the base rate lending system to MCLR system. So now my question number 5 and 6 of topic 3 I gave a focus on what is the difference between the base rate and MCLR system, explain how MCLR helps RBI in short-term liquidity adjustment and what is its impact on home loan borrower. So these two questions are the answer for this base rate lending system to MCLR, where I have also created a video and shared the link to see the video and get a better understanding on these lending sector reforms. Now coming to question 2, open market operation. So open market operation is basically the part of RBI monetary policy. It's a general method of credit control. And question number 14 and 15 of topic 3, I asked you to prepare, explain the role of RBI in credit control and management of liquidity and inflation in the economy. And top question number 5, explain RBI quantitative or general method and qualitative or selective method of credit control. So this covers in question number 14 and 15. And the last question is liquidity adjustment facility. So question number 16 and question number 9 of topic 5, I asked you many times in the video to prepare liquidity adjustment facility very nicely, because nowadays RBI is focusing more on repo and reverse repo for management of liquidity in the economy. I hope that my sample questions must have helped you in the preparation of money and banking paper. This time I will be taking public finance for general elective fourth semester and money and financial market, that is a DSC paper for sixth semester economics honors students. So be with me and do like, subscribe and share my channel with all your friends so that others can get benefit from it. Thank you so much.